Hey guys, welcome back to episode 9 of US stock market technical analysis. So in this video, I'll be taking a look at the S&P 500, the Dow Jones and the Nasdaq, and I'll be sharing with you my technical analysis for the three indexes individually. Right, so we'll begin with the S&P 500, Dow Jones and Nasdaq, and in that order. Before we begin on the technical analysis for the S&P 500, I want to take some time to share with you a quick overview of the stock markets in the recent weeks. So in the recent weeks, there has been quite a roller coaster ride in the stock markets, especially for last week and this week. There are a couple of reasons why we are seeing this increase in volatility in the markets recently. Some of the forefront reasons why the stock market is facing this increase in volatility is because of the US elections, the rising number of pandemic cases, and the lack of progress in the stimulus bill. And this has created uncertainties in the markets and have contributed to the increase in volatility. Okay, that's a quick overview of the overall US stock market. Now let's take a look at the individual indexes and analyze what the price charts are telling us. So we'll begin with the S&P 500. We'll go to the daily time frame to have a greater picture of what's going on. Right, so this is the daily time frame for the S&P 500. Let's bring on the technicals. So we see that in the past week, this was Monday, Tuesday, Wednesday, and Thursday. So Monday we opened with a doji candlestick, right, as indicated by the small body and long upper and lower wicks. And from Monday to Tuesday, we see that prices gap up, and for Tuesday to Wednesday, prices also gap up, and from Wednesday to Thursday, prices also gap up. So far this week, the S&P 500 has experienced a number of gap ups. And this tells us that there was strong buying pressure in the S&P 500 this week, as indicated by the gapping up action. So we are seeing quite a lot of bullish momentum in the S&P 500 this week. But with that said, there are also things to watch out for. If you take a look at the candlesticks for Tuesday, Wednesday, and Thursday, you'll see that even though prices managed to gap up on the following days, for the candlesticks themselves, we see that there was quite a bit of price rejections for the individual candlesticks. So if we take a look at Tuesday, prices opened at a level of around 333, and it closed at this level over here, at 335. However, this wasn't the high for the day. The high of the day was around at this price level of around 338. So buyers managed to push price up all the way to the level of 338. However, the sellers stepped in and pushed prices down. Towards the end of the day, we see that there was a bit of selling pressure coming in for prices. And the same thing is true for Wednesday and Thursday. So this is Wednesday. You see that there was quite a bit of price rejection pushing prices down, right? And in fact, the upper wick is quite a long one. And this indicates to us that there was selling pressure towards the end of the day, where sellers stepped in to push prices from its high to its closing price. So this was the high of the day, which was around 347, and it pushed prices all the way down to close at a level of around 343. And the same thing is true for Thursday. On Thursday, prices opened at the level of around 349, and buyers stepped in and pushed prices all the way to the high of around 352. But towards the end of the day, the sellers again step in to push prices down. So sellers step in and push prices down to a level of around 350 to close at that level for the day. So even though there was quite a bit of buying pressure and bullish momentum behind prices this week, as shown by the consecutive days of gapping up action, however, at the same time, there was also a bit of selling pressure towards the end of each individual day, as seen on the individual candlesticks on Tuesday, Wednesday, and Thursday. So while the bulls are definitely in charge of prices for the S&P 500 this week, we know that there are still bears in the markets as indicated by the price rejections on the individual candlesticks. While I'm optimistic about the stock market, I'm still cautious. And as we have seen in the previous couple of weeks, things can change very fast in the stock market. Just last week, we were facing a potential double top pattern. So this was the first top over here, and then this was the second top. So if prices broke below this area over here, it would have confirmed a double top pattern. And a double top pattern is a bearish signal for us as investors and traders in the stock market. However, the double top pattern did not materialize. Instead, prices managed to find support at this area over here and managed to push to the upside. And now for this week, we are facing a potential double bottom pattern as indicated by this, the first bottom, and then this was the second bottom. And when a double bottom pattern materializes and is confirmed, it is a bullish signal. So just last week, we were facing a potential double top pattern, but this week we are facing a potential double bottom pattern. So this shows just how fast the markets can turn from one corner to another. And that is why I remain cautiously optimistic about the stock market, despite the strong bullish week that we have experienced so far. Okay, now let's take a look at the hourly time frame and see how prices are reacting to the areas of interest. So we'll zoom out a bit first. So last week prices declined by quite a bit, but it managed to find support at this area over here. And so far for this week, we have managed to push to the upside. And right now, if we see where prices are currently at, they're hovering just above this area of support. Prices are taking a bit of a breather over here after it has gapped up from here. And if you take a look at the previous gaps, like over here, prices gap up. So prices had a little breather over here before it continued to gap up. And then there was a bit of a breather here before prices also moved to the upside. And then there was a bit of breather here before it also moved to the upside. So right now, prices are taking a bit of a breather and digesting the move. And it is also deciding where to move on next. It can move to the upside or it can move to the downside. The next level of interest to the upside is at this level over here. So I'll draw the box here and I'll extend it to here. Okay. Yeah, so that is the next level of interest that we are taking a look at for the upside for prices. So if prices do move from the upside from here, the next level of potential resistance it might encounter is this level over here. So it might encounter some resistance over here. And if you manage to break above the resistance and find support here, then it will continue to the upside. But at the same time, there's also a possibility that prices break to the downside. So right now, prices are finding support at this green box over here. But if prices do break below this support, then the next level of support that I'll be taking a look at is this green box over here. That's my technical analysis for the S&P 500. If you have enjoyed and learned something from this video so far, do drop a like on this video because it will really help the channel grow and allow me to produce more content such as this. Alright, the next index that we'll be taking a look at is the Dow Jones. So we'll go on to the Dow Jones and we'll start from the weekly time frame. So let me clear up the technicals. Okay, so if you see on the weekly time frame, the Dow Jones also experienced quite a strong bullish week so far. So similar to the S&P 500, last week the Dow Jones gapped down and prices were pushed down from 281 all the way to this level of around 265, forming a long bearish candlestick in the process. So last week there was a sell-off, but this week not only did prices manage to gap up from last week's closing price, but prices so far for this week has managed to form a long bullish candlestick, telling us that this week there was buyers coming in to beat prices up. Now let's take a look at the daily time frame and let's bring on the technicals. So for the Dow Jones, there was also a couple of gap ups. And if you notice, the price chart for the Dow Jones is very similar to the price chart for the S&P 500. For example, if you take a look here, this was a potential double top pattern. But because prices didn't manage to break below this support level at this green box over here, which would have given us a confirmation of a double top pattern, but instead now it looks like prices are forming a double bottom pattern over here and here. So if prices manage to break above this previous high at around this level over here, then it will give us a confirmation of a double bottom pattern. And a double bottom pattern is a bullish signal for us as investors and traders. Now let's take a look at the hourly time frame to see how prices are reacting to the individual levels of interest. So if you see where we are currently at this level over here, prices are facing a bit of a resistance. But from what prices are showing us on the hourly time frame, it tells us that unless the trend changes, prices will be heading to the upside. And why is this so? So if we take a look at this area over here, you'll see that prices are forming higher lows and higher highs. So higher lows and higher highs indicates to us that prices are on an uptrend. So prices are likely to continue and follow the trend, which in this case is an uptrend. And prices will continue to do so until something changes. So if something takes place and the trend changes, then the next areas of support that I'll be taking a look at is this green box over here and this purple box over here. So if prices decline, then I'll be taking a look at how prices react to this area of support. And if prices do manage to break below this support, then the next level of support that I'll be taking a look at is this level over here. That's my technical analysis for the Dow Jones. The next index that we'll be taking a look at is the Nasdaq. So we'll move on to the weekly time frame and work our way down from there. So we'll clear the technicals too. Okay, so this is the weekly time frame for the Nasdaq. The price chart for the Nasdaq is also very similar to the price chart for the S&P 500 and the Dow Jones. One thing that I want to highlight on this weekly time frame for the Nasdaq is this price level at around 266. So if you take a look at this price level of 266.91, you'll notice that for the low for this week and for the low for last week, both lows were at this price level of around 266.91. And in fact, if we take a look at the other candlestick, such as this candlestick over here and this candlestick over here, you'll see that the low for this candlestick and the closing price for this candlestick was also at this price level of 266.91. So this price level of 266.91 is a very important support level because whenever prices reach this level, we see a clear price rejection at this point. So down the road, if there's selling in the Nasdaq, I'll be paying very close attention to how prices react to this level of 266.91. Okay, now let's move on to the daily time frame. And we'll bring on the technicals. So over here, you see that prices were clearly trending downwards. Not only were prices making lower highs and lower lows, but we also could draw a clear downtrending line over here. So if you take a look at the trend line, whenever prices reach the trend line, what happened to prices? Prices move to the downside. And when prices reach the upper trend line again, what happened to prices? Prices were pushed downwards. And then over here, you also see that when prices reach the upper trend line, prices were pushed downwards. And then for here also, when you reach the upper trend line, it was pushed downwards. And then for here, when the prices reached the upper trend line, it was also pushed downwards. So there was clear price rejection at this downtrending line or this upper trend line. So notice what happened when prices break above this upper trend line. So when prices finally broke above this upper trend line, there was a very huge gap between this candlestick over here and this candlestick over here. Whenever there's a very clear and strong resistance and prices are not able to break above this level of resistance for a couple of times, but when prices do finally break above this level of resistance, what typically happens is that there will be a lot of buying pressure. So you can see that after prices break above this clear and strong resistance, what happened to prices? Prices gap up because there was a lot of buying pressure when prices finally break above the area of resistance. Okay, let's take a look at the hourly time frame to have a greater insight into how prices are reacting to the individual areas of interest. So this is the hourly time frame, and if we zoom out a bit, you can see the number of times when prices reach this upper trend line, prices were rejected from that area. So this was the first time, then we have the second time, then we have another time over here, we have another time over here, over here, over here, 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 and over at this area over here. So if we take a look at the hourly time frame, you can see that the number of times prices were rejected from the area of resistance or from that upper trend line was quite a number of times. And the greater the number of times that prices reached the area of resistance and did not manage to break above that level, it indicates to us that the area of resistance is very strong. So prices did not manage to break above that level of resistance not only 1 time, 2 times or 3 times, but 9 times. So when prices finally break above that area of resistance, look at what happened to prices. Prices continue to move forward and charge ahead. So right now prices are taking a bit of a breather over here, and it is also finding some support at this green box over here. So because of the very strong move upwards, and because it also took place very fast, prices might need some time to digest the move before moving either up or down. That's my technical analysis for the Nasdaq and for the overall US stock market as a whole. If you have more videos such as this on investing, trading and the stock market, make sure you subscribe to my channel so that you don't miss out on future videos such as this. I'll see you in those other videos to your financial success.